How's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. All right. What's up, Arthium? How are you, bud? Moon Wen. Yeah. Let's do this. What's up, A? What's up, Spooner? Anna. Do you guys miss me? Sorry, my wife was feeling sick last night, so I was taking care of the kids and her, and I was sure week I got effed on my UVXY calls. Yeah, like I said, I think the market's deciding that they want to make some money instead of be rational, and that's kind of their MO. If you kind of notice, you have this entire bull market, real strength, right? And now you're coming here, and is this going to be the dead cat bounce? That's what we're going to find out. To me, it looks like we're getting some pretty low volume here for, this thing getting pumped as much as it is. So, what's up, man? Yeah, I was gonna say, DZ, you want to jump on? I can update the title. We can have you on, and we can talk about the market if you'd like. Okay, let me figure out how to do this. I think I've got to do. How do we establish? I've got to go on to Zoom, I think, and then share the link with you. Ayo, DZ. I do have to cough back a little bit today. I'm going to host. Do I host? I don't even have a camera on this thing, but let me just try it anyway. See what happens. So I can make one. Alright, so I got to turn on my headphones. Let's do this. Join with computer audio. And then I think what I have to do, and you guys tell me if there's any reverb or get some echo. But I think I have to turn this on. And you guys tell me if there's like echo or reverb or anything like that. Everything okay so far? Copy the invite. And then I'm going to write DZ. If he's got time to jump on, I'll DM him right now. All right, so everything's good. We're not no feedback or weird echo. And then what I can do is I can bring this Zoom meeting over here. I think I'm supposed to, let's see, multiple participants can share. Okay. Okay, he's installing updates. So, in the meantime, we can go and I'll just grab this over here. Make sure my volume's up high enough so I can hear him when he comes on. And can you take a quick look at MVST to see if there's warrants or dilution? Yeah, that's fine. Let me grab it real quick while he's getting ready. You have to excuse my coughing and all that stuff. What's up? What's up, dude? Can you hear me?
Yep, hear you loud and clear.
Okay, good stuff. Can everyone on YouTube hear him too? You guys let me know if you can hear DZ. Let me just look up MVST. Microvast Holdings, 12% short interest. Dilution may not matter for this one. It might be because they're a bigger company. Sometimes they do that. You may have to go to filings and then look at the 10Q and Control F and warrants. The company, I'm just skimming, but let's see. Yeah, it looks like there are some warrants, and they should be under. Yeah, there's private placement warrants, and there's also early bird capital warrants. Looks like $11.50 is exercise price on that. So, okay, let's bring on DZs. Everyone, yeah, he's too loud.
Yeah.
I mean, I can turn down your stuff if I need to. Let me see if I can do that. Okay.
Yeah.
Laugh out loud with what
Normally people say I'm too quiet, so so this is a first.
Okay, so you guys tell me, do I need to turn DZ down a little bit? Because I basically have to like adjust mine because I have a really quiet microphone, so like I have to turn mine's up 1,000%, and yours is at like 500, so I can turn this down if that's need be. Everyone's saying, nah, it's good.
It's good, yeah.
So what's up, dude?
Yeah, hey, yeah, things are good. Get a little nuts here getting ready for my next, I'm giving 3 presentations at a conference up in Madison, Wisconsin here in about a week and a half, so, and then doing a seminar up at Michigan Tech, so 4 presentations. Nice. But yeah, things are, well, minus the fact I took just an absolute shellacking, like you were saying on UVXY.
Yeah, dude, I was watching it today because I've got a long term. See, I bought Theta for me, so I've got like January like 350 SPY puts, and I bought some like SPXU, but they're all dated for like November. So like for me, I'm still down like 40%, but I'm like not getting absolutely crushed. Yeah. No, I mean, hindsight's 20/20. I should have done that, but I don't know. I've looked at how things were evolving the last week and a half, and no, I mean, it looked like it was going to go down. Like I was,
like there were so many events that could have taken it down to. Like, I mean, the CPI briefly did. Yeah, what else kind of brought it down? I mean, yeah, they, the SPY, I think when it retested its 50 DMA, that resulted in a little bit of a downtrend too, but just it's kind of incredible though, for 5 straight weeks, like since we hit 362, like every single piece of bad news, like it doesn't matter whether it's earnings, FOMC is of all things too, like, there's all the drama going on with Taiwan, Nancy Pelosi, Nord Stream drama, European inflation coming in hot, and the fact that, now we have 250 basis points of rate hikes priced in, and markets love it, apparently.
Yeah, I'm telling you, man, like, the one thing I was like, okay, if you have any sort of, like, rational thinking, just throw it out the window. Mm-hmm. Like, we know that we're going down. We just don't know when.
Yeah. Yeah. And playing devil's advocate here, I guess. So, like, one thing I've read repeatedly about these bear markets is that these rallies, they tend to be very, very nasty, and they can last for, weeks or months at some point, kind of flying in the face of intuition or so. But normally there's, I want to say like 4 or 5, like during a bear market or whatever, but I don't know. But these sort of catalysts, though, that you would just straight up expect to just dump everything, it's like instead they're just like, oh, let's close all the shorts, let's make sure they get stopped out.
Yep.
Like, I'm pretty sure that's what they're...
Yeah, they don't care. Like, for them, they know it's going to go down. They're the ones, controlling it. So, might as well burn all the bears, make sure retail goes, you know what? Every time I think it's going to go down, it goes back up. I'm going to go up, and then they're going to go down. They're going to do it hard. Like if I was looking at this, like if you take a look, I don't know if you can see the stream, but basically...
I'm on YouTube, yeah.
Yeah, so like, this looks like it's, breaking out of the channel, right? Like, you got a channel here, looks like it's breaking out. Like it will go to retest it, but when I think it's going to come out kind of like this, and then we're just going to see a huge candle one day, like a just like massive, like the world's falling apart. Everyone's like, what's going on? I thought that was the bottom.
Yeah.
And it's going to go down to this 340s level, like where these gaps are. Like, I drew these out last time, and that's where I think we're heading. It's just a matter of like, okay, well, let's go ahead and make sure all retail is screwed, and then we'll go down here.
Yeah.
Well, I mean,
I don't know. It's I was reading a note actually tonight by Zero Hedge. Like, I have their premium subscription actually, it's really handy, I think, because he just more or less like reshares like what the traders at like the Goldman and the Morgan Stanley desk, like what they are saying about like their inflows and outflows, which I find to be pretty useful because like it's straight data and it's not necessarily packaged with an opinion of sorts. But they're pretty much saying that like hedge funds were so long for such a long period of time, like they were obviously short the meme baskets, but, heavily long in stocks like Apple and Amazon and, several blue chips or so. So what are the institutions doing? They're just forcing them to liquidate. And,
well, because I think we showed that the last time I was in here, I think I took a screenshot that I think most of the hedge funds actually went short the market, and I'm wondering, are they getting squeezed by like the longs?
That's exactly, I think, what's going on here. Like, they got to the bottom and they're like, okay, maybe it's time to position short here. And I think it's just some of these banks are just trying to push somebody out of business right now.
Yeah, they're like, all right, you want to mess around? Here we go.
Yeah, but so that can only speculate on that, but I think another reason for that too is that one of the phenomena I was reading about tonight was, there's two things kind of going at play here. One, Sam Carson, I think, pointed this out in one of the videos I shared with everybody in the Discord, that because the Russia-Ukraine war happened, like there was so much hedging already, like for volatility, that whenever that actually happened, people were like, okay, let's cash in the hedges. So it created a massive flood of volatility products. So like, the UVXY, VIX puts got, basically opened up a whole ton, and then, people cashed that out. So that created a flood of volatility supply. And then couple that with, the fact that it's already like low, and apparently these CTA like auto buys, so like certain funds, like they have to buy, to the tune of like $5 or $6 billion like a day. And then the second, like the VIX reaches like below 22 or so, that daily buy flow just doubles.
Yep.
So now, we're kind of in a situation where these auto algos are just going to buy literally everything, regardless of what the macro is. And then that's going to keep smashing the VIX, obviously, lower and lower. So, maybe, gets to like 1920 or something like that. So that would put the SPY at somewhere between 415, maybe a little bit higher as a blow off top or so. So I think that's kind of where the short-term direction is. But thinking about that out loud though for a second, just think about how crazy that is. We have a VIX of less than 20, which is like, that's still
during a recession and like rate hikes and
missed earnings everywhere. Yeah, so it's like people that are actually buying because they think they're buying the dip, like they are like within a 3 to 6 month time period, like they're going to get royally screwed by that. And not because like they won't make money on it over time, but just from the idea of like, well, Amazon just went up to $140. If they actually reprice this properly, you could have Amazon stock at like $80 or $90 a share as opposed to $140.
Yeah, I've been waiting actually on like, because all these things are trading like, like 20, 30 times earnings. And I'm like, I'm going to wait.
Yeah. Yeah, exactly. That's kind of my attitude too. It's like, as you and a lot of people know, like what's left of it right now, because I've taken some pretty heavy losses like on the short positions I've had there. But it's basically inverse the stock market, long ATER, kind of as a hedge, because hopefully all these short squeezes, hopefully they'll eventually hit the small caps too. And
I think that's one of the things I was looking at was like, it makes sense that small caps are usually the first ones they rotate into. Mm-hmm. Because they've already been just beat the hell for the last, I don't know how many months.
Mm-hmm.
So, like, it makes sense. It's like, all right, we need to get our money out of the large caps. They've been basically like, and I was thinking about this, like, everyone's like, well, who's buying right now? Well, if you think about it, like, every single week or bi-weekly, you have 401ks across all of America that just buys long.
Mm-hmm.
They're not playing anything short, so it's literally just like a constant inflow of like money going into these ETFs and these, like these big large caps. And at some point, the rich are getting themselves out. They're selling it to these 401ks and these pensions and whoever else is, just constantly on this passive, like, okay, we're just going to constantly buy,
Mm-hmm.
But yeah.
Yeah. It's like, get it like all marked up just in time for the end of the month, only to, kind of screw these funds at the, within the first month or two, or week or two, excuse me.
Yeah, and right now they're making puts really, really cheap. And so when they eventually, I'm sure we'll start seeing some like flow, like you have a scanner, right?
Yeah, I have the unusual whales.
Yeah, I would imagine we're going to start seeing some, like, they'll probably do it like really, really like quietly and like in small batches in the beginning, but they're going to start building up at this point because I think they know where it's going to go next.
Mm-hmm.
But like, I was just looking at this, like, so this was from, I guess, like beginning of July, basically. But if you look at the net short positions,
mm-hmm.
like Citadel, ICC, Deer Park, Parallax, Bank of America, Group 1, another Citadel, that was on QQQ, Jane Street, like all these big hedge funds were literally shorting the market.
Yeah, those are massive ones too. So like,
yeah, and this is in what, like, you had another like zeros at the end. That's billions, right? 21 billion.
Mm-hmm.
19 billion net short. Like, those are huge positions. And sure, they could be taking some profit on this, but like making puts cheaper and then they'll reposition again. But like, you could either that or some of these like Black Rocks were like, oh, you guys want to be short? Let's go ahead and just squeeze this and put, make them uncomfortable.
Yeah.
So I don't know. One of the two things is happening. Either these guys are closing their positions and then, adding stuff back in to push it up before they go back down, or these guys are getting squozed by the Black Rocks and the big guys who are like, all right, you guys want to be short? We've got a lot of money.
Yeah. Yeah, exactly. So, and if most of the buying pressure right now is just, short squeeze, like cover buys.
It's not on high volume. Like, that's what I was looking at. Like, if you look at the volume.
Yeah, that's gone down pretty much every single day.
Yeah, we're decreasing volume right now. I mean, so we're going up on the RSI, but we're going down on volume. So, like, we were pretty oversold. That's part of it.
Mm-hmm.
So you come up for a breath before you take the next plunge down. That's kind of where I see it.
Yeah.
Could it go back up to like 420? Sure. But like eventually it's going to go back down. And I think it's going to get down to this level because I don't think good things are actually, happening in the economy. I think things are actually going to be really, really crappy.
Yeah. It's like, yeah, indeed. It's like, the recession's declared today, and then like right at the open, it's like, you saw a brief like 0.5% drop in all the indices. The Nasdaq, I think, at one point was down like 1%, 1.5%, and then that according to again Zero Hedge, they said, it hit the VWAP or whatever, and then these passive pension funds they just bought, just straight up, started pumping, 10 billion into buys, and then
the smart money's selling into that.
Yeah, because it's like, they have to buy it. It's like, okay, if I'm the big bank and I want to dump all these overpriced PE stocks, what better time to do it than at the end of the month, and then just basically force them to bid up until they're like, okay, now we'll finally sell. So it's basically would the seller's market, I guess, be the right way to put that, because nobody's really selling right now. I mean, it is pretty low volume, and it's pretty obvious that sellers aren't really there, so it's kind of absent. So if people want to buy, they have to bid higher for it.
Yeah,
So
yeah, I mean, people are always like, well, how is this work? I'm like, you can like look at Aterian. Like, it doesn't even take that much. Like, if you have like a couple $1,000,000, you could slap the ask and make that thing fly. And retail will come FOMOing in after because they see a stock running and they're like, oh, I want to be part of this.
Yeah.
And but like they're not even spending that much money. They're just slapping the ass. Like, the volume was low on a couple spots, and then they let retail get in, and then that's when the real magic happens, because they can slap the ass when they feel like it, and then the retail will be constantly just doing it. So, I was looking at like the top here, right? If you look at the top, I mean, this looks like Wyckoff. Like, you came up, you tested high, come back down, and then you got to. If I pull up Wyckoff next to it, that's what it looked like. It's like, okay, the rich people are like, all right, we're going to start exiting our positions here.
Yeah.
And now you're going to come here, and you could have another run back up, and then you can just absolutely tank.
Yeah. So it looks like if this is Wyckoff, then it looks like we're kind of in that that first retest after phase A, and going to go for a phase B. I think, what do they call it? Spring test.
Yeah.
Yeah.
If I can move this somewhat. Yeah, distribution. Here we go. If I can zoom in a little bit. Come on, there we go. But yeah, like, you come up here, chop around, go down, come up, go down, like here. You have to go back up to the uptrend, and then you chop around, and then one more double top or triple top or double top in this case, and then that's when it will fall apart. Like, I don't know. I'm seeing Wyckoff, man. I don't know about you.
Yeah, it kind of is too.
Right? So, like, imagine like this is here, right? That's here. Then you have the run down with the slight run up.
Yep.
And then we're going to take a huge run down, right? Break all the supports. So where do you think the supports are for this? We could probably do that inside the Discord, right?
Yeah, probably. I mean, you got your
TA thing, right?
Yeah, so just pop a line on there.
What is it? Like exclamation mark TA SPY or something like that?
Oh, yeah.
Okay, here we go. So support lines are at 400, 395. They don't have the lower ones.
Yeah, that definitely looks about right.
They have the fib lines in there, though. So fib line,
415-ish or so. Yeah, that seems about right.
Yeah.
Below.
But yeah, I don't know. I mean, I'm just looking at this going, that looks kind of familiar.
Yeah,
here,
all these. I'm pretty sure I've seen at least one TA guru mention all of these support levels. Or if you just aggregate them up, it comes up with this same exact chart that you have here.
Yeah, like
yeah.
But I'm looking for that. What do you think the strongest level of support is on this thing? Probably somewhere. So this is where I expect it to either break through or reject, is around this 410, which we're at 408 now. So we're going to get that test pretty soon.
Yeah. I think, 415 to me probably seems like a max. 410, I don't know.
That's 4920 is the first resistance line. And then 41232 is the next one.
Yeah.
So that would be like, oh wait, where did I draw this line? 412, right? 412ish? I don't know. Somewhere around there. But I knew it was roughly around the spot because I was looking at it and I was like, just eyeballing this, just throw it in. So we'll see. It may be slightly higher, but like we're getting pretty close to there. So the first resistance is 409. We could break that tomorrow morning. And we'll see if it, tested and then breaks off of it and heads down, or if it breaks through and then retested and, take that a little step higher.
Right.
Where would this be? This would be probably then, close to here, roughly. Let's see. Maybe here-ish? I'm just eyeballing it from...
Yeah, I'm going to get my chart here real quick here.
I'll go to your screen. Let me pull you up.
I have, 410 actually is exactly where the
you want to share your screen?
yeah, sure.
I think I allowed you to.
this up here. This on my go to. Okay. Oh yeah, we're on Zoom. Sorry. Okay. Get so used to the whole. Okay. Now let's go to my trading view app here. Let's see what the.
So what are you using there? Is that like a what's it called? Ichigo Cloud or whatever the name is?
This is it's the White Cloud Sniper, I guess.
Okay.
So it's basically it's a version of the EMA clouds here. So
okay,
you know
gotcha.
where he just uses a few different combinations, but they're functionally the same. I mean, if you overlay like traditional EMA clouds, they'll give you almost exactly the same thing.
Okay, gotcha.
Just to tell you where like expected volume is and all that.
Yeah.
And then of course his own algorithms that are actually quite good, like when they find certain supports, where they just bounce off of it's basically volume weighted linear regression.
Okay.
So yeah, it works out pretty well here. So let's go to
the SPY being irrational.
yeah, it's completely flown out of its just volume distribution zone. Like it's just straight
like yeah, we're just gonna push through that.
This is a FOMO chart here. Like everybody is FOMO buying the SPY right now. Like it's like there's no recession, no nothing going on. Yeah, 15 minutes overextended,
Look
30
at
minutes
that
overextended.
thing. Yeah.
Just, oh my god, dude! Like this is
when this falls, it's going to be falling hard.
Yeah,
really.
Wait until there's real selling pressure here. Yeah, 1 hour is definitely overextended. Let's see, 4 hours here. Okay, well, 4 hours.
Yeah, still got some room.
Probably not, but yeah, this is about it looks like it's going to find. Yeah, it's still technically an accumulation here, and I guess this is kind of a critical juncture point here. And right around, it looks like right around 410 or so. That's where the 50 day.
Yeah, I've got 412.32 is the second resistance line.
412.32.
32.
Yep, that's like right at the base of this. See how this works out here. Yeah, this is the second distribution zone here. So as soon as I could see something where it's obviously going to gap up tomorrow morning. People who were nimble enough, I think, like if they snipe a call, they can probably open it up, let it wick like in the first minute or two and probably,
try to get out
$1 or $2 or so. You could probably scalp, I don't know, 20-30% on a 0 DTE, which is what I should have been doing all week, frankly. But, degenerate me. It's
wow.
like, okay.
You were using that brain of yours and using common sense. Shame on you.
I was, trying to, but...
Yeah, don't ever use common sense with the stock market, man. You know that.
Yeah, I mean...
up is down and down is up.
Down is up, yeah. And yeah.
SPY's going through Bizarro world right now. Oh, we're currently in a recession. We're tightening. We're missing earnings left and right. People people can't afford anything, and they're putting it on credit. The housing market's about to burst. Yeah, the stock market could probably go back to an all-time high.
Yeah, it's just we'll send it. Yeah. Oh god, yeah.
So, all right, so it's got some room on the daily, right?
Yeah, it definitely has some room here. Yeah, and I think once it touches, here's 409. Yeah, this 409 to 414 zone. Yeah, this is definitely going to be extremely hard resistance here.
Yeah,
and one thing I'm kind of thinking about too. So, if we think about just all of the events that's kind of happened over the last, we'll say 4 weeks at this point since the last week of June. You've had negative news after negative news after negative news. Now you finally have catalyst, or if you want to call them that, in the form of earnings here. So, Apple's going to soar tomorrow, Amazon's going to soar tomorrow, and then I think when the SPY finally gets here, people are going to be like, oh, wait a second here. And then the other thing too, that whole, there's a few things I guess I'm thinking about here too, but the chip bill, that passed the House today. So basically,
if that gets, it's not guaranteed, but if it goes through, then that's going to be pretty huge for a bunch of different tickers.
Right. Yeah. So I think of NVIDIA,
AMD,
Taiwan Semiconductors,
TSM, all those.
Yeah. that group of tickers there too. But I remember back in November, whenever they had the infrastructure package, and there was like $5 or $6 billion, I think, dedicated to EVs. And I think for like 2 to 3 weeks, I think it was, some tickers were on a 21-day cycle. Others, like ChargePoint and EVgo, they were on a 34-day cycle where they just ran for basically a month straight. But their peak was actually about 2 days before the bill was signed. And then the day that the bill was signed, there's actually a pretty substantial drop. And I remember that because, I think I entered my calls on ChargePoint, I think like 2 days before, the bill was signed, and I'm like, wait, my calls aren't actually going up here. Like ChargePoint, it fluctuated like 50 cents, and then it went down like on the day the bill was signed, and then by early next week, I was like, it was already down like, 10-15% or so, and I'm like, what the fuck?
Yeah.
But that's how I learned. It's like, it's usually, they, buy the rumor, sell the news sort of thing. So I wonder with the semiconductor like basket of stocks.
Yeah, have they already priced it in?
Yeah, that's why I can undergo the same fate here, because like AMD's gained a ton, like it's up over 20%, I think, since, just riding with, Micron having decent earnings and, those, just the whole, stimulus or the catalyst, I guess, play, you could call it that. So, and that's a pretty big part of the S&P as well. So, we'll see. I'll be watching that.
Yeah, and I was going to say, I mean, that's super interesting for, because this is obviously the broader market, the macro, like, Have you looked at IWM in a while?
I do, like, I watch it, but it
kind of looks just like everything else.
Yeah, it's just like, this is kind of the frustrating thing. It's like, okay, like, I could live with, like, a nice little short squeeze, but I'm like, just give me my ATER squeeze, god damn it.
Yeah.
We're not getting it, it's like, they don't have $2 million to pump our stock here, but they find, like $500 billion, to just,
make the SPY make the SPY look like a penny stock.
Yeah. It's like, the economy's bad, but the stock market's going up.
Well,
like, yeah, seriously here. But yeah, it looks like, the IWM here, it's already kind of at this like daily resistance level here, and it's definitely at a multiple levels of support here. So like it kind of flatlined around late April, early May or so before cratering.
Yep.
And then again from like late May to basically the first week of June, I guess, where it had a little bit of a relief rally here. But yeah, it looks like it's been this is all accumulation here, and then it just did get forced down here. So I think just kind of where this is at here, like it's, more accumulation here, and then, it's just kind of in distribution now, and,
we're going to see it's going to be either, well, it's like, did they accumulate for a reason, or is it like just to run up to basically the next, the area of resistance and then sell out there and then push down further and then...
Mm-hmm. Yeah.
Or is this the beginning of this turnaround on the small caps? And I think we still have another leg to go down across the board.
Yeah.
That's at least where I'm thinking.
Mm-hmm.
But yeah, this is DZ.
Yeah.
I'm just realizing people have been talking to us for a while.
Yeah. Sorry, I've been on my chart here.
No, you're good.
Yeah. So I think yeah, I don't know. It's honestly a confusing one here, because one thing I could say with relative decent certainty is that whenever the IWM decides to go into distribution, like, not only will ATER obviously benefit from that, but you'll see like the bellwether stocks like AMC, GME, those will start to rally hard. And I mean AMC over 20 and GME over, I would say, 40, 45 plus, which would put it back near, its pre-split price of about $180 to $200 a share, which
exactly.
So
I was going to say, for a long time, like the 160 to 180 was kind of where GME was very comfortable hanging out, and then they really pushed it down.
Yeah.
And then, so I think, what was their volume today? Let me pull it up. It was like... We'll probably have to jump on another Zoom call in a second, but let me just pull up GameStop. GameStop only had 3.2 million volume even after the split. That's like pre-split volume of like 1 million.
Yeah, that's oh god, yeah, this is not a good chart here. Like this, like it's already been in distribution on the daily. Yeah, you can tell, that they ran this up like up until the split here. They had it test like the upper part of this like maximum distribution zone here.
Yep.
Then it just got sprung down into the bottom here. So yeah, that's pretty typical here. I mean, yeah, Astro, who built this algorithm, like he definitely tested it a lot on AMC and GME, and very much respects these EMA clouds pretty well here. But
yeah,
I don't know. This gets pushed down any further here. Like I don't know, but I think this kind of coincides. Like we're definitely at a turning point, I think, in the market because the SPY is definitely going to test somewhere between 410 to 415 tomorrow. If it goes up from there, then maybe the IWM stocks, including GME, maybe it gets a nice little retest here, and then it can kind of get back up to these regression zones here, up to $41, $42 a share here, and then really take a stab at just hitting a home run here. But it's so deep in here, though, unfortunately. And, if the market decides to come down here, then, GME is going to come back, from 32, 33 a share down to 29.
Yeah, I was going to say, it looked to me like 30 was going to be a pretty strong level of support, but like it's going to dip down occasionally below that.
Mm-hmm.
But I think it finds its way between 25 and 30. Like 25, I think, would be a pretty strong level as well.
Yeah. Yeah,
Just
it agrees to this. Yeah, this long term support here, which is right now at about $23.95, and it goes up about 5 cents.
Yeah, so I would imagine that's going to be around like 24, 25 when it really will be the next level. I've held off on buying more until we get probably down to that level. But unless, I mean, from what I saw though, something was interesting. Did you see? I think they announced that they think that about 50% of GME stuff is DRS now.
Really?
Yeah.
Including the ones that were like, I assume all the ones that got split were obviously those are auto like DRS as well.
Yeah, they announced. I think was it something like somebody's told me that it was up to like 50%. That's what they are. Now this is Reddit, so who knows, but. We'll see how accurate their numbers are on the next, I guess, earnings. But every time I go on Reddit and I see BBB or BBIG, it's getting rough.
Yeah.
Oh my god, I feel bad. Like I got a little position in there, but not much. But like this thing's just been like, I mean, the only thing I can say is it's got gaps to fill on the upside at some point. But like, the question is, how low does it go before they start? Like, is there's gaps right here in the 160 to 180 range? There's also a gap now here. What is this? 80 cents?
Yeah, it's 160 to 180, and then down here from like 81 to 98. So
like
it's basically.
At some point, unless they have more dilution coming, I would probably play that just for a gap fill because they're pretty oversold right now.
Yeah.
But I'm like, do you play it for, 30 cent, maybe.
Yeah. And you can see some of my old TA here, like back when I was actually active here.
Oh, yeah. What'd you put down?
5-second move. Yeah, I think this is when I was actually, let's see here. So that was back in May. BBIG touched 362 after. This was, I remember that was when they actually announced Tide.
Oh,
and
yeah.
Sure enough, it reached like 412 in after hours, and then it just never really
did anything after that.
It went back to this 295 level, but just kind of hovered there. Made a run at 350, and then as soon as they announced that the distribution was going to be delayed, it just utterly puked. I think to like 210, 220 a share.
Yeah.
Yeah, which was.
I think we got 5 minutes left. That's good. We got to see.
Yeah.
So Dirty asked, will GME behave like Tesla after they give up? Well, number one, I don't know if they're ever going to give up. I think if anything, they're going to get like eventually, margin called. I don't think they're just going to give up. But if you'd have to go back to probably like the while ago because shorts really were like really short back like a couple years ago with Tesla. And what they typically did, and this I thought was pretty smart of Elon, was every single time they were going to cover, like they knew the shorts had to cover, because he would basically overpromise, and then they would like actually have decent numbers. I think they have pretty creative accountants over at Tesla, to be honest with you. I know it's all legal, but there's different ways you can make your books look better than they are, and I think he's hired some smart people. And every time they got an earnings beat, they would start running up, obviously, because shorts are having to like get, cover and get squeezed, because people like Citadel actually were the ones that were long on them. So they would squeeze out the shorts would start covering, and then he would issue ATMs into the squeezes and raise even more cash and then build more factories. And so he basically used the shorts as a piggy bank to basically fund himself into the S&P 500.
Yeah.
So
I mean, he's one of the smartest businessmen, obviously, of our time.
Yeah, like you may not like him, but he was pretty smart about how he did that, because he basically understood that these guys were having to cover. He had another huge institution in Citadel that was literally squeezing out these shorts and, just pumping these things really hard, so these guys that were having to cover, and when they did that, he would issue ATMs into it and just raise tons and tons and tons of cash. Sure, they've got tons of shares outstanding, but they also raised a ton of money doing that and built, these factories, put money into R&D. So, but yeah, I remember buying it back when it was like in the 60s.
Yeah. Yeah, it's like 63 to 67 here, and I just had I mean, but look at the shape of the squeeze here. Yeah, this is okay. Yeah, let's go back to 2019 here. About 3 minutes here, so that looks awfully familiar to the the ATER early April run here. It's just like just slowly, and then
pop. Yep.
Yeah, exploded up over 1, 2, 3, 4, 5, 6 trading days.
Yep, they get it back under control and they push it back down.
Yeah, and then had kind of that second test, and then they just knocked it back down from 170 to I guess this was early 2020 though, so this is I guess there's a pre-COVID squeeze.
Yeah, and that actually was back, I think, here over. If you go back a little bit, I think it was, look for volume. Like maybe here-ish. Like that was after an earnings. They beat on earnings there. This was an earnings miss, but they still had volume. But like there was a couple of these little runs, but this is when they like really, I think, started squeezing these guys. Was on what was that, November of 2019?
November 2019. Yeah. It's
roughly wherever that earnings is. This pop right here.
Yeah, this is late October.
Okay.
Yeah, I see this. Yeah, because there's a gap up here.
Yep. Oof. That never filled.
Yeah. Proof that gaps never need to be filled.
Sometimes. Or at some point we're having a meltdown.
Yeah.
All right, we got about a minute. Here, I'm just going to leave and start, and I'll DM you the new link.
Okay, sounds good. Yeah, I'll take a minute here.
All right, cool. All right, we're going to get him back in here. All right. Give him the link. Get back in and screen share. Multiple participants can share. There he goes. So in the meantime, until he joins us again, we'll go back over. But yeah, I think, there he is.
All right, and back.
Yep, and you can share your screen again if you want.
Absolutely, yeah. We're talking about Tesla here and its relationship to the GME. So,
there we go. Good stuff.
All right, and we're back.
Yeah, so I think it's interesting what they did, and obviously GME kind of took a playbook out of that, because GME, even though everybody was upset, they raised like $1 billion, paid off all their debt, all their like expensive short-term debt, and they basically left a couple long-term things, but like they had good rates on it because obviously the market or the interest rates were really low. But yeah, they raised a ton of cash on it and basically paid off all their debts.
Yeah, yeah.
But to be honest with you, they probably should have done another share buyback and really just put this screws into the shorts. But
yeah,
they didn't do that. They also should have done a stock split to give pressure back, because that's the thing I think is a lot of people are not convinced. Obviously, GME is over. That's the whole super stock theory, is that basically these guys kick the can and they're not going to let this thing go. And so what they're trying to do essentially is they're going to DRS the entire float if they can, and prove that. Yeah. Yeah,
well, yeah, I really hope to see the conclusion of that, because that would be pretty epic if they show that, they just find shares to, basically short and do whatever they want to with the price. And, my guessing is that 80 to 90% of all that naked shorting is probably done through the options chain, just because,
the
market makers ever lose control of that, then,
Well, that's what happened with that the whole I think somebody wrote a DD on this, which was basically talking about the delta being over 50 on most of the options, and how majority of retail are dumb and they don't buy the right options. With deltas higher than 50. But he was basically explaining that during the when it actually squeezed, the mini squeeze they call it, but it was still a squeeze from 40 to 500. So that's a pretty big squeeze to me.
Yeah.
Sure, it didn't hit 1 million like everybody thought it was going to, but I thought that was pretty unrealistic, to be honest with you. But I didn't think 800 would be completely out of question based on the fact that it was 600 pre-market on the January 28th. Because I actually looked at it and was like, oh my God, it's 600 something dollars pre-market. Somebody was literally buying shares at 600. That's insane.
Wow. Yeah. Crazy.
I think I had a screen. I'd have to go back because my phone broke and I had screenshots of all that stuff. I'm so pissed that my phone, I go in the water. We went rafting and my dry bag was not so dry, and I had a crack in my screen, and apparently the water got in underneath that, and I can't get the thing to turn on now. But I had screenshots of all that stuff.
Yeah, it's crazy, but think of it this way though. It's if the pre-split price, right around now would be somewhere between 125 and 130 or so. So it's down about, slightly over 75% off that high. Think about BBIG, I guess, in comparison, where even at the current price of about 80 cents right now, that's the equivalent of, GME going from, or what was I saying here? Yeah, GME going from 400 to 130 is actually less of a per dollar hit than BBIG going from $4 a share down to 80 cents a share.
Yeah.
So the fact that the GME folks have been able to retain that much value for that long,
it's pretty insane, to be honest.
It is insane, yeah.
Because you figured this was a stock that was trading in the teens. When I bought my first shares, they were $16 a share on GameStop. That's pretty nuts.
Yeah, that's insane. Now you have a split dividend price where double that price gets you a GME share now.
Yeah.
Yeah.
I think there's still something there. I think they've been basically saying and trying to cover this up, because this is going to be the worst look that the market could possibly have, which is if they prove that basically this is all a sham and that these guys can short whenever they want and there's no repercussions. That means every single stock is probably manipulated across the market, and that's not a good look. That means the SEC is asleep at the wheel. It means the DTC is not doing their job and knows that there's problems and is ignoring it, which means that there's no trust anymore.
Yep.
So if you can't trust the market, and that's why Elon was like, I don't respect the SEC, and it's well, yeah, I get it now. After watching these stocks just get when they turned off the buy you can only then go down, right?
Mm-hmm.
Did you read that? What a bro. How did you find a guy that talks in the same monotone as you?
Is that in the chat?
Yeah.
Oh, man. Yeah.
That's Izzy. What's up, dude?
Yeah. That's funny. Yeah.
Yeah, my wife was teasing me. She was like, hey, this is Anon. I was like, oh, you found my channel? She's like, yeah. She's like, you should do ASMR.
Yeah.
So, all right. So, what are you seeing here on GameStop? Obviously, like, I mean, this thing was insane up.
You know what's more? I'd say that this spike at the beginning here is just how nice and long it was able to hold. You know, this like
180.
Yeah, I'm trying to recalibrate myself here. So yeah, this split adjusted price between 32 and 85. So basically, yeah, between 120 and 320 a share for basically an entire year.
Yeah.
That's just absolutely crazy.
And like some people, I'm sure, lost faith during this time frame right here, because that's a long time of being like holding, buying. Like some people are like, "Oh my God, it's going back down." You know, they saw a dip below 100. You know, some people probably exited then, but you know, the majority of people are just DRSing these shares, and they're like, "F it, like I'll go down with this ship."
Yeah, yeah, exactly. Yeah,
like, we'll figure out some way of making GameStop profitable again.
Yeah, well, I mean, Ryan Cohen, you know, he's definitely not asleep at the wheel, you know, doing what his shareholders want him to do. But, yeah, I don't know. Yeah, looking, kind of at the bigger picture here, it's been, you know, when it goes into these distribution zones here, you know, it tends to stay in here for quite a while. You know, comes down a little bit, reaccumulates, but it really hasn't been until December or so where it just went, you know, hard spring mode here where, you know, December, January, February, even into March or so, where they just kept beating it, and then just suddenly it just had to have a really big relief rally here. Yeah, kind of, it's come down, did it again here, right before the thing here. But the thing I'm kind of seeing here, I think there's downside here just because, you know, it's not going to stay in this red distribution zone here forever, and it kind of needs a breather from, you know, just people marking it up here. But, you know, there's definitely some demand, you know, between the, you know, $23 and $31 range or so. And what that's probably going to do here, I think, is, you know, these blue accumulation clouds, like, they're probably going to flatline here, but this distribution cloud will come up here, and that'll allow these other, you know, other local supports here, you know, to just kind of congest a little bit here. So, and I think, you know, just, you know, if you looked at something similar like Bollinger Bands or even just like simple moving averages here, you know, you would recognize this as kind of a multi-cluster forming where, like, if it breaks above in one direction, well, you have all the accumulation kind of overlapping the distribution here, and where's it going to go? You know, this is what ATER was more or less doing back in, you know, late March of earlier this year, and it's like, well, if it pops, it's going to go.
Yeah, and it did.
Yeah. And I think, we're kind of getting at this point, I think, of the, you know, this longer-term bear market where so many of the IWM stocks have just been beaten for so long that, you know, there's just nobody to really, like, sell it into. It's like, you know, like, you know, we can be a little bit frustrated, especially those on the short side, like myself, on, you know, this, you know, certain SPY plays like Apple and Tesla or whatever, where it's like, okay, like these, you know, these are still like way overpriced compared to, you know, other growth stocks here.
Yeah.
You know, and, you know, so at some point, capital is just going to have to come back in here because, you know, capital is going to eventually have to exit the larger caps, bring the market down with it. And
yeah, and that'll probably push us down into that like 24, 25 range.
Yeah, and that'll get everything absolutely compressed. So I could actually argue here that I think even just a little bit of a, you know, maybe, you know, something on the order of a couple of weeks, maybe 1 or 2 months tops, depending on what the market needs here. But like if this actually compresses here a little bit, that'll get everything much more compressed here, and that'll really allow GameStop here for another, like, a serious go at it. Because, you know, if you look back just even over the past couple of months, it's like, like the price was going up, it was clearly testing, and it certainly could have went at some point, but there's just so much, they're just such a wide area here of, accumulation and distribution that like people that wanted to buy, they're not going to buy it up at, 60 to 80 a share, but, they want to wait until, 30 to 40 or so. So, once people realize, like, okay, I'll sell for less and then people will buy for more, you get, the compression here, I guess, as you see over time here. And then at a certain point, like if GameStop really explodes or if Ryan Cohen pulls another rabbit out of his hat here, get all the shares DRS'd here. And I could actually imagine a scenario here now that I'm thinking about it here where, you give this a few more months, people have their shares, they're going to keep DRSing them, they could get up to 60, 70, 80%.
By earnings, they announced the DRS numbers at earnings, which I thought was super interesting because you're going to see an official amount in September.
Interesting.
Isn't that interesting?
Yeah, it is interesting, because, if you have one accumulation fund that probably does something like that, just start drawing some arrows here. And then you have this one here. This one's actually curling up here, which is a good thing. So you'll have the accumulation here, and then you'll have, I have a polyline here. I don't know. Yeah, but you'll have, these here, you'll have, probably the price do something here, people accumulate, and then, if he does something pretty dramatic here, he could then have, something, where.
Yeah, it takes a nice run. Well, and so here's my thing, right? So they introduced the NFT marketplace, and let me see if I can find any. Somebody was keeping track, I think, of the numbers of like how much money they're going to, how much money they're making, basically. Let me see if I can find if somebody's tracking that daily, because from what I saw, I believe. They were making at least like 200,000 to 300,000 off the beta.
That's quite impressive. Jesus.
Yeah, I mean it's small for what they're. It probably cost them a couple million to set the thing up. So their ROI, but like that's pretty impressive. That like, and they're not even launched the game stuff. That was just like off the art and the meta stuff, like the NFT stuff, like. They haven't even introduced what I think is going to be the bigger portion for them, which is literally the like when they introduce the gaming with Aterian and like that's where I think they're going to have a lot more transactions. So
yeah, it'll be interesting. Yeah,
where's the numbers?
Doing just a quick little looking here. One thing that I find useful with these clouds too is that like when they touch like the red clouds, when they go up to a certain level. That indicates an approximate maximum, like where, like let's say something happens that just causes a mass panic buy. The top of these clouds here, usually indicates like a pretty, it's like a hidden sort of resistance.
So basically like 67, roughly?
Yeah, 67, that's natural too, because at least based on, the current pattern that's kind of been made here, like this is kind of sloppy here, but it clearly, bottomed out here at about, $20 here, rose up to about 41 and, tested, it looks like, 78% of its move here before its current move down, which is right around, looks like 38 or so. So I could, go around here, but something happens at earnings here, like, 67, like, that's about where I would take profits on calls, like if there's a really serious catalyst here, and then as with any move to 160, it almost always comes back down. So it would come down probably back to, 47 to 50 or so, which is 100%. And I don't know, who knows? Well, the big catalyst, I think, though, like, and this also actually kind of aligns pretty well in September here too. There's the September FOMC meeting. If Jerome Powell comes out and says we're completely pausing rate hikes and we need to restart QE, like. Every stock in the market's just going to just absolutely positively blow up. And GameStop, I would have to imagine, is going to be one of the ones that leads it because, they're in the IWM basket. They'll benefit the most. And there's just going to be, as Zero Hedge calls it, the money rainstorm of unprecedented proportions. So Yeah, 94 on this chart here. That's about $360 a share, and then what is this here? Yeah, 361 here. That's about 480 here. So these are actually
pretty.
It's funny here. You see like how these levels here, just from this pattern here, like when you redo the Fibonacci's here, that basically takes you to former like
highs.
Yeah, former highs or former consolidation zones in the stock here. So yeah, 240 was pretty common. 360 was, or 400 was common, and then yeah, 480 is about the high here, and I don't know. That's just wild to me, honestly. So
it's amazing how that works, isn't it?
Mm-hmm.
Like
yeah, these
patterns in nature, patterns in the market. Like I know you probably nerd out on that and go,
that's just
mysteries of the world.
Yeah,
universe, I should say.
Indeed, yeah.
Well, I mean, like cosmic clouds when they're forming, like they make Fibonacci. Like it's weird, right? Like,
like you get the like at the top of the clouds, like you can excuse me, talking too fast here. It undergoes a process called entrainment, where basically you have a parcel of water vapor. So imagine you compress a bunch of water vapor into an area and then you raise it up. Like as you raise it higher in the atmosphere, it gets cooler. Water vapor, of course, is naturally warmer than its environment, so it has to start condensing and becoming, turning vapor to liquid. But because the air around it in the upper atmosphere, tends to be so much more drier, it ends up, dry air has to come in and mix in with it, so you get these eddies, and indeed these eddies, you'll see these little swirls on the edge of clouds, those actually follow, the Fibonacci spirals, pretty closely as well. Yeah, really. And then, some of those turbulence processes you can map with, like eddy equations. So basically, first and second order, well, in our field, we call them first and second order closure schemes, where, mathematically it's like EI sine pi minus 1, you plug it into, a set of discrete equations and, basically solve for, what are the angles or so. And they tend to, it's pretty close to Fibonacci. I'll just say that, but.
Oh yeah, I did find the thing here. All right, here we go.
Yeah.
So they DRS 50% of the float.
Oh, did they? Nice.
So literally, it's of the free float, not of the entire float, but of the free float.
Mm.
So they've DRS 50% of the free float right now.
Mm.
And I was literally laughing because I saw this.
Mm-hmm. That's wow, 50%.
But I mean, I don't know any other stock that's ever done this.
I don't either. They'll certainly lead the charge for that.
But yeah, look at this thing. If you look at the volume.
Yeah, let me go to your scene here.
Oh, did you not see the last couple?
I did not see, no. I'm still sharing my screen here.
Okay, sorry, here.
Yeah, I'll unshare for just a second here, and I will... Okay, we'll look at yours here. Okay, we'll go to YouTube. Okay, yep.
So, yeah.
Oh, that's great.
I thought that was pretty funny. But back to business, right? Mm-hmm. Got to get 100% of the free float.
Oh, yeah.
Then this one.
Hold on, yeah. Sorry, I'm catching up on the chat. Hey, what's going on in there?
Oh, the purple? We're direct rushing our shares, Jerry.
That's funny.
And then this was what I was just noticing, but I guess that would technically be the lowest amount of volume. As far as I guess with once you account for the split. That would be, I'm guessing, how they did this, because I think there was days that were lower than 3 million volume. I feel like there was a day that was 1 million volume on GME, but that was, if you think about it, a 3-to-1 split, this might have been the lowest that they've ever had, because you had to divide by what, 4?
Yeah, it's 4-to-1. So
that's pretty crazy.
It is.
That means nobody was buying or selling. Or sorry, there might be a couple of people buying, but for the most part, everybody's
just buy and hold, forget. That's what you're supposed to do.
Do you want to take a look at BBBY?
Yeah, I see a question here about ATER too.
Oh
So
yeah, let's do ATER real quick.
yeah, we'll do ATER here. Let me re-grab the.
ATER's been trading a million and lower. Hasn't done that since August.
Yeah, let's see here. Okay, so yeah, so I have to say, so I did my bi-weekly long DD here, and so far this is actually kind of playing out to how I thought it might.
Yeah.
I'm honestly surprised, like, it didn't break my thesis, though, just because of how, like, ridiculous the rest of the market's been squeezing here. But, like, yeah, I think, like, the GME split happened here, and then you got this big solid red candle. Now we're, kind of 1, 2, 3, 4 candles into this accumulation zone here. So, and sure enough, the stochastic RSI here, where it was clearly overbought for a couple of days here. So basically, like, a lot of the volume was just like heavily skewed to the buy side. Although these last 2 days here, though, it was interesting because like I saw like the net outflows, it was like 2-to-1 outflow, and I'm like,
what's going
on? Like short-term short positions like entering here, so they can play this move from like 270 to 230, which if you have the balls to do that, good for you. You made a little bit of profit, but
there's no volume, so they're like, well, might as well.
Exactly. Yeah, you can pretty much push the price to whatever. But yeah, if you're short though, like if you want to enter at the top, like you need, you basically set the sell price, and then whoever's buying, like you kind of have to meet the seller's demand there. Then of course, they'll come down here and cover. But yeah, what I still kind of see happening here. So now that we know that earnings is on the 8th here, that puts, let's see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So
12 trading days.
Yeah, so that's about a 13-day cycle or so here. So I don't know. Yeah, I think it stays in accumulation here for a while.
Runs up right before
the
earnings.
Next few days, so if it does a couple of these bounces here, maybe it stays in this light blue zone here, and then it bumps up to the light red zone here. So something between the 230 and 270 range. And what I'm kind of thinking as far as a way to play it without touching any of my shares, because I do like my options here, and I'm thinking about doing calendar spreads here. So basically where I take a deep out of the money call, so like an October $3.50 or $4 call, collect that premium on my shares, and then use that to finance like a $2.50 like at the money call, because like whatever ATER gets at here, whether it's like 250, 240, whatever, like if it's at 240 though, I'm going to be highly tempted to just like execute that trade almost immediately, because like, if it's 250 and then, earnings comes in and it shows like, if it shows anything over a penny, positive, like earnings per share, like ATER's probably, trading up at these red bands here. So I'm thinking, that could be anywhere between, 350 and 390. But if it's a negative beat, but still like a beat, it probably,
280s or even lower.
Yeah, 280s, yeah. So it's, I think we're going to have a pretty good read on it by the time, like, a day or two before, because, with what at least some of the other stocks have been doing, like Amazon and, Apple especially, where they were very clearly front ran, just like, pump, and then, massive beats after the fact, whereas something like Meta was like, was down, recovers a little bit and then just gets absolutely, like, destroyed. You'll kind of see those clues, I think, ahead of time here.
Yep.
So, but
yeah, and I noticed the right now the Ortex is showing the exchange reported data came out. I guess what was it, like 2 days ago, 3 days ago, and it had risen. So we're back up to about 30% short interest.
Okay.
The free float, but
it's a pretty good sign. Yeah, that they're it seems like they're going to try to front run this a little bit too here, but just given, again, assuming we don't get any like massive shocks. So like if we read the earnings report, if something absolutely goes awry, that's always a possibility. I'm just not expecting it, but like if it, it is bad or whatever, and, the short interest is still, pretty high or whatever, it's just like, it's still below its asset value.
Yeah.
Like Aterian would have really had to have screwed up, to lose that sort of, value compared to where, if we're in like the below 250 here, and and like say, if they had another like impairment that cost them like 10 to 15 cents off their net assets per share, if that's a number, they still have to go up 20, 30, 40 cents or so to even just meet that number. So I think there's definitely going to be a lot more upside, I think, for this earnings than downside. One, because we're in this accumulation zone here, and if we go back, let's see here, so it was May, I think 10th or so, May 10th, May 11th, something like that. So yeah, I think it was May 10th where we had the earnings here. We had a down day, but like it's a green candle because like we gapped down, but pretty much just spiked down a little bit and then it climbed up for the rest of the day. So like it was in distribution, I think, when that happened here.
Did that gap ever fill?
No. Well, hold on. No, it did not. Yeah, so it's still there, and that's right at $4. Yeah.
So there's a gap still at 4.
Yeah.
All right.
Yeah, I still like $4 as like kind of a first test and retrace point. Like whenever we do get like
the top of the.
Yeah, because I think what's interesting too here. So I think. Yeah, like whenever the stock decides to move again, like it's going to have to test $4 again. It's probably going to blow up over top a little bit, come back down, retrace or whatever. But if Jerome Powell turns on the money printer again, or something really serious happens with ATER, like at these prices too, I'm going to go off on another tangent here for a second here. But one of the things with all of these really, really cheap stocks lately is that it increases the probability that someone might want to, acquire, a portion of the company, or, just buy the company
the whole
outright.
thing out.
Like, if someone's going to come in and say, hey, like I see your stock price is at $250, but you have, $3 per share worth of assets. Why not make an offer? That's going to not only squeeze the shorts out completely, but it's going to bring FOMO. And not saying that can happen, but it's certainly at this price range where that becomes like a real possibility.
Yeah.
So I don't know, and I find it interesting too here, just based on this chart here. Like you have your obvious resistances up here, in this 390 to 410 range, and the distribution is actually below where people accumulated here at 840 here. So like there's people here ready to sell at $8, but people also ready to buy, slightly higher here. So if it gets up there, then
it
that's
could actually,
you get your blow off tops, as they call it. So I don't know. So the question for you on this topic, then, I know the private placement warrants come into effect, I think, in September.
Yep.
How many?
There's 7.1 or something like that. Let me look it up real quick. It is ATER. There are 7 million, so 7.087. So basically a little bit slightly less than 7.1.
Oh, that's still like nothing though. Like,
yeah, I mean it'll bring a total dilution then to roughly, now this is if all of them go. So basically, we're at right now like 68, I think, 68.9 or something like that currently. And I don't even know if it's that high. Like that's what they're reporting, I think. So I think some of these things have already been gone, but like you would basically just add another 7 on top of that, and that would be your total shares outstanding. Now, granted, they have to get the stock up to 320 though to actually unlock those. So minimum, it has to get above that range, just because as soon as you start issuing out in those warrants, it's going to drop the price because that's dilutive by nature. So you actually have to run the stock probably to like $5 to maybe $6 a share to even like dilute that much. Because 7 million shares is a good amount of shares, which means that if you started at 320 exactly, you would drop yourself out of the dilute. You would dilute yourself out real quickly, and you would have to pump it back up to even get those shares out. So they need to basically run the stock up another time to basically get those shares out if they want them. Yeah,
and this placement came out while the stock was below 320, but never actually eclipsed.
Correct.
Okay. Yeah, so Yeah, this reminds me. So one of my first original plays in BBIG, I remember going back to that stock for a second. Like they had, all those warrants with Hudson Bay.
Yep.
And I think it was at a point in early December where, it was trading at like, 250, 260, and then just one day it's like 360. But that was also the day, like, there was an 8K that came out a couple days later that said Hudson, exercised like 30 million worth of that. So they basically pumped up the price, and they, I think what Hudson ended up doing was shorting and then using the warrants to cover, so they shorted at 360 and they covered at 320.
Exactly.
With the
they
warrants
they gave themselves a backstop basically to do that.
Yeah, exactly. So,
and it's possible that Armistice is doing the same thing. I mean, it's a possibility. We don't know, but we know that right now they own about, I believe, 8% of the entire company.
Mm.
If I look at this, they own 8.01%, which is about 5.2 million shares right now.
Yeah.
Now, here's the thing. They don't want to go over 9.99 million.
Or percent of the company.
Sorry. Yeah, percent of the company. So, because then it comes with a headache of like, oh, why are you selling? Like, there's a bunch of stuff. So that's like a magic number to them. Well, that's only one. Like, so there's a lot more warrants that they have access to. So the question is, what do they want to do? They're already sitting on 5.2 million shares.
Mm. Right. Yeah. So well, if they're increasing the flow to them, they can definitely like dilute by 1 to 2 million or so and still keep that 10% or 9.99% stake.
Correct, but they can't get all of them.
Yeah. So my thinking then, I guess. So if it's 360, I guess a share, then they probably. Well, how about this for a coincidence? Yeah, these resistances here, like right at 386 to 430 or so. So I could imagine one day, like we wake up and we see ATER like it's suddenly like it's gapped up like over 60 cents or whatever, and I think we can probably interpret that as Armistice wants to cash out on their warrants or so. So they're basically offering a massive supply of shares up there, and honestly, like I'm okay with that because it's funding to the company and it's not toxic dilution that other companies actually get. So it's like.
So I guess the way I was looking at it was like, so obviously they need the cash because at this point right now they're not cash positive, so they're going to need cash as many times as they can get it. Any which way they can get their hands on it, they want to get their hands on cash. But the way I'm looking at this is this: we know that they have to move the share price up to even get to these things. So there's going to be a move, and it's going to be probably pretty like it will come out of nowhere. It's going to be probably like last time, and they'll blame retail for pumping it, but really it's I think the reason why things pumped last time was if we go back to the run to 7.
Yeah, let's see here. Okay, yep.
Part of me thinks that they just said, you know what? They already pushed the stock down pretty low, right? There was a spring, I think, here-ish. There was like 210. I don't know if it was this one. No, it was like right around here. Right? It was like 210, like right there, and then it chopped around here. We had no volume. It was just like kind of like where we're at now. And then all of a sudden, we woke up that next day, and we had 140 million in volume.
Yeah, that was insane.
And it just
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, so a perfect 13-day cycle, I guess, from bottom wick to top wick here.
Right, and so, but here's the thing, right? So people are like, well, why did it go down so aggressively? They started actually issuing out the pre-funded warrants during this time. So part of me is going, okay, could it be just I just happened to dumb luck write a DD? They saw some volume, just said, all right, let's just unlock some of these warrants. And so they were the ones actually pushing the stock price up, not so much retail. Like retail was definitely in on it, but like hence the volume. But at the same time, was it Armistice and High Trail that were the ones pushing it up just to unlock their pre-funded warrants? Because they knew they'd have to get the stock price up if they were going to do dilution. So that's what they were doing during this time.
Yeah. Yeah, and that's a great point, actually, too, because one thing with pre-funded warrants, too, is that the way you make money, of course, is to unload a short. And that's probably why we saw so much, what do they call it? Not naked shorting, but I guess short exempt, I guess.
Yeah.
Which almost always has to do with warrants. So if you're going to short here, but you don't get your warrants until September, then they need to make sure that the price is high enough so that when it gets down to a slow enough level that, the short interest had made it worth it to cover, basically, that the total carry, it's price determined here. And I think we saw that, and I think both you and I, pointed this out, we saw that the volume was going up, but the ADX, I guess, people were, there was a ton of selling that was indicated by ADX, but OBV was going way through the roof here.
Yep.
I was there's definitely shorting going on up here. So it makes me wonder, if all those warrants weren't, being, unloaded here, and because they know what the price is, the carry's been completely determined, and, they'll just cover once they unlock it there. So that set of warrants is more or less off the books and not going to do anything more to the share price.
Exactly. Yeah. So and at that point, they also have, if they can't get the stock to go under, right? If Aterian's still alive, if they can't get the stock down to zero, well, now you own 10% of the company. Might as well push it up, make some money. You could sell out and reshort it if you want it.
Mm-hmm.
That's my thinking right now. Is for them, they're not going to be super profitable shorting from here. Possibly down to if it goes any lower into this blue range, you're not making tons of money. You're making, pennies.
Yeah.
You'd be better off letting it run back up. Retail wants it too.
Mm-hmm.
And let it push up. And then at that point, it would go ahead and do that.
Yeah. Yeah. So you said the warrant price was $3.20. What was the cost per warrant? 20 cents, 30 cents, 50 cents.
I'd have to take a look and see.
So they
have to go back to that.
I don't know if it's super important, but I guess the point being there is that if it's $3.20, there's a premium that they paid on that, so that obviously makes it we'll say $3.50 for the sake of argument.
Yep.
Maybe they do use earnings as a way to just kind of pump it up, but then unload their short exempts up here, so that by the time they unlock it, in early September, so they'll fade it down.
Yeah.
Or not even think they really need to fade it down per se, because again, they enter the short, and then they have the $3.20 cover price. So as long as let's say $6 minus $3.20, that's $2.80 per share that they make profit less the premium. So as long as they're not paying more than, let's say, 2 cents a day per carry, that price is locked in basically, and they don't ever have to worry about it again. So yeah, I could fathomably see this earnings. Now that we've discussed this a little bit, it's a lot more sense for them to just let this, do a little blow off top somewhere in the, the $4 to $5 range, and then
that's kind of where my thesis has been, is they're going to push it back up into that range, because everyone's been oh my god, when the stock gets pushed down in this low area here, and I'm going, you guys realize they have to push the stock up to even get their warrants out. They can't execute warrants down at $2. They have to push the stock up, which means if they're going to do dilution, they have to push it past 320.
Yeah.
So, if you want off the roller coaster, that's totally fine, but wait for a smart time to actually exit then.
Indeed. Let's continue this discussion, but you need to reset the Zoom here.
Oh, yeah. Are we done? All right, hold on a second.
Okay, yeah. Well, give us 2 minutes.
Okay.
Yep.
Yeah, one minute. Okay.
Yeah.
Okay.
All right. Talking to.
I'm finding it right now. Here's my Zoom. All right, I'm getting him the link. We'll do one more session, maybe. You guys good with hanging out and watching the video? We're good? Everyone's okay? Is it keeping people's interest a little more? All right, hold on. I need to... Come on. There we go. Participants. Invite. Everyone's chilling. Everyone's watching. Obviously, we don't know. We're guessing, But this is just me thinking out loud, DZ thinking out loud, kind of like, okay, what would make sense, That's why, all the people that were freaking out, they were like, oh my God, that, let me make the share screen. Okay, there you go.
All right.
But, yeah, I was just saying, though, like, all these people that were like, oh my God, we're down, like, the low twos. I'm like, good, lower your average, and where they're going to have to push the price up.
Yeah. So, like, my Weeble, like, I've had a perpetual buy order just in there for 210. Like, if we wake up, one day and, like,
gap down, and hopefully, I'm trying to get fills as close to, like, that area as I can. Like, to me, anything under, like, 235, I've just been buying.
Yeah, no, it's a great place to add, just given the history of the stock, and given we know that this can certainly move again here, but yeah, to that end though, one of the things I've been thinking about too is like, well, what's a good way to play options for Aterian, without
giving up your
without giving up your position here. So like, one of the, I guess, things like, I've toyed with just over the past few months, like with varying degrees of success. And I think one of a better strategy that I found at least more useful, at least when I do this managing my brother's account, like, like one of the ones I'd like to do on his account, for example, like I like UVXY, but instead of doing what I do, which is more like the degenerate type, just buy calls and wait for something to hit. I take out a call, but I'll also buy, or I'll sell a credit spread.
Okay, so did you ever take a look at the optionality thing?
I clicked on, I need that link again from you. Yeah, I read it initially, and I definitely like the concept, but I never actually got around to, like,
I'll be honest with you, I've actually been, like, because initially they were doing it, they did it initially because, like, they were going to try to make it, like, easy for people to do, like, obviously, like, call spreads, put spreads, and it's a little bit safer for most, new traders because they're not going naked on one side and then getting absolutely like wiped, right? But here's the thing, right? I've actually been using it because it's simple, and I can actually, they've already done like the legwork on the spreads, and like I've been actually using it because I'm being lazy on my other account. I'm like, oh, you guys made it really easy for me just to do a call spread, like, or a put spread.
Yeah.
And they actually found that there's another person that's on it, that's literally been buying both sides. So they're basically making butterflies. And like, I don't know, you have to check out the app because like this is, it's a free plug for them. I don't really care. Like, they're not paying me or anything, but like, I found it being pretty easy, and like I'm able to just be like, okay, I know I'm limited on like how much I can make, but like once I get towards max profit, I just take it and then I just put it into something else.
Yeah,
and it's been really actually simple to do, and I'm like, okay, I can see why like why people tend to do spreads more, just because like you may not go to the moon because you're capped, but like they made it like one of the ones I'm on right now. It was a GME. Let me see. So I put in $120, right? My break even is $32.85 on GME, and what they did was I bought a GME 32.50 call and sold a 33.75 call, and my max gain is $360. But my max loss is what I put in, which is 120 something.
That's not bad. Yeah, 3 to 1.
Right? Like, so I'm sitting there going like, okay, so I can do this all day. Like, I picked the direction, and then like even like my SPXU, like I'm down pretty heavy on some of these things, but like I also have like they also give you theta if you want it, and I did that. Like, so I've got like SPXUs that are not going to expire until September. So like I'm okay on those. I'm down like $7.
Yeah.
And like my max gain is like 162. And I put in $30 or something like that.
That's not bad, yeah. I actually just downloaded the app myself, and I think I get paid at midnight tonight, so I think I'm going to load it up. I'll probably add like $100-$200 maybe to it, and
it's I don't know. It was super interesting. I just thought I've been using it more than I thought I would, because I'm like, okay, I didn't already know how to do this, but like I kind of like the convenience of it, so I'm like, oh, okay. So like, anyway,
yeah.
what are these put and call spreads? Danny asked. Yeah. So basically, what you're doing is you're buying a call, like you would normally, like if you do any options. Most retail, they buy calls because it's the simplest like concept to understand for them. You basically say, I want to buy these, and it gives you the right to buy them at a certain strike price. So like you can buy things that are quote in the money, which just means it's lower than the stock price is, and then by the time your option expires, it gives you the ability to buy that. You have the right, but not the obligation to purchase.
Yeah.
When you sell a call, though, that is actually bearish. And what you do is you're buying a call and you're selling a call. So it basically allows you a maximum gain, but also like a maximum loss. Is that a good way of explaining?
Yeah, that's a great way of explaining it too. The reason for that is because like you're, with options too, like, you have the whole theta thing, so you want it to go up by a certain amount of time, but, part of the risk is if it doesn't go up, then you basically lose all that premium. So when you sell something a little bit more out of the money or away from the strike that you're buying, you're effectively neutralizing the entire theta loss.
Yeah.
So the only thing you're really capturing is, the delta and the gamma that you would collect from the stock price moving, above like the outer leg of your spread price.
Yeah. So it limits the amount of risk. So like,
yeah,
you're basically you're buying something bullish and you're selling something bearish.
Basically, yeah.
And that it goes on the put side too. If you're betting if something's going to go down, you're selling a put, but you're also buying a put. So like, it's the same concept, just it's directional basically.
Yeah, exactly.
And so their app, you just basically say, I think it's going to go up or down, and then you pick your time frame, and then you pick your risk level, because obviously there's different buckets. Like I've been playing more like the low to medium stuff. I'm not playing a whole lot of high risk stuff. Because those ones are like, okay, you sometimes I see like a factor of like 4 to 1, and I'm like, I don't need that much risk.
Yeah.
But like some of these, I'm like, okay, I bought one that was like, a medium risk, and like I'm up $210 on a GME one, and as long as the stock finishes above, let's see, my break even is $32.85 on GME, and the current price is $33.84. So as of tomorrow, if it stays there, I'll make $360 off that option.
That's solid.
Off of what was my initial?
100 something.
Yeah, 120.
Yeah, hell yeah, it's awesome.
Yeah, so I'll make $360 off that option. So like, that was a good one.
Yeah, that's a good one indeed. Yeah, but yeah, I guess bringing this back to ATER here for a second.
Yeah.
So yeah, what I had in mind, I think for ATER was like, so
we're gonna do some spreads.
We pretty clearly, we have about $3.50 to $4 is like kind of if it's next time it spikes, like, and I mean really spikes, that's where it's either going to do a little blow off wick, or it's just going to meet resistance. So if you sold a Aterian call like out from like November, so you're basically you're buying yourself a lot, you're selling your rights to the shares, of course, but the premiums are still quite large. That's mostly because, a lot of the delta hasn't been yet converted to theta and gamma, so you don't really get that bleed yet.
Yeah.
So, you sell that, you receive a premium on that. So, like, if you sold at $4, and let's say you get $50 per contract or so it's like it's functionally the same as selling your ATER shares in October for $4.50 a share. So, like, not great, but anybody that buys like 100 shares here at under $2.30 or so, that's like over 100%. Like, over 100% in a 3-month period, like that's darn good money.
Yeah.
Like, I would take that trade, 100 times, just even swinging money, for that period of time. But like, if you take that premium, and then reinvest that into, an at the money call. So in this case, I would say, $2.50 is probably appropriate. Let me get my app real quick. I will quickly look this up.
You have your own Black-Scholes thing, right?
Yeah, I use Black-Scholes. I always check that just to make sure that the bid asks are actually like fair. And then I always try to like get like $1 or $2 less than whatever the ask is, because there's always going to be someone that's like, I need to dump these, and
yep.
Therefore, let's do that.
They panic and just go.
Yeah. So
for covered calls, you must own 100 shares of stock. Correct? Yes, that's correct.
Yes, that is correct. Yeah.
All options go in sets of 100.
Mm-hmm. Yeah.
Would there be any downside to the covered calls? Yeah, basically what you're doing is you're saying that you're fine parting with those shares at a certain price. So it all depends on what your cost basis is. Like for some people, if their like cost basis is like $6-7 and they're selling $4.50 call, they're going to risk losing money, obviously.
Mm-hmm. Yep.
If your average though is like $2.50 and you sell $4.50 calls, then you're going to, no matter what, make money.
Yeah, exactly. Yeah. So that's kind of the thing. It's like, in a way that I think about it is like, if ATER reaches this price, I'm selling it here. That way you don't have to worry about it. Oh my God, it's going to $5.50, and then like, they give you the big red waterfall candle where it's like, oh, but now it's down to $4 again. And as long as this bear market's active, that is always a possibility, unfortunately, just being real with the possibility there. So at least by selling covered call, it's like, if you sell one that's, October here, for example, if my average is, let's say $2.20 a share, like I'm looking at these $3.50 calls, and, I could sell for, the bid is 16 and the ask is 22. So like I could sell that for probably 20 pretty easily. That's almost 10% of my position, that's funded by the, just this covered call here. And, for one, 220, that's $130 profit on 100 shares plus, this $20 here. If I take that $20 and I go to the August 19th strikes and I see that, okay, $2.50 calls are only 20. So
you can buy one.
Yeah.
So it basically covers your position.
Yeah, it's like it's basically buying me rights to 100 free shares or so, and then if the earnings report comes on August 8th, and then it opens up at like $3.50 to $4 a share or so,
you sell it and you can buy more shares when it comes back down.
Exactly. Yeah. So it's so $20 premium, but like at every penny it goes over $2.50, that's $1 that gets added to the price of the option there. So let's say it gets to $4.
Yeah.
Yeah. So
you have the number on
it? Or sorry, what are you saying?
You can do that in your head?
I have a little bit of muscle memory with this.
All right.
But yeah, so like, if the premium, let's just say you slap the ask on that, you sell it, well, I don't know, the bid's 20 or 12. Yeah, you could probably buy that for 18 or so. $2.50, $2.68, $4, that would make those contracts worth somewhere between 120 to 140 each or so. So that's not bad for basically taking out a payday loan on your ATER shares at a later date. You get your calls here, you make over 120 per shares, and, if you take out 10 calls, that's $1,000 that you have there. And then if we know that those are the warrants, and you would know that based on the price action there. So like, if it's an earnings beat, it's going to gap up after hours and then it's going to fade into the open. People are going to take profits, and then, the company, they're going to, keep that short position there. So it's going to stay elevated for a little bit of time. That's the time, to collect your profit on the thing there, and then, just give it a couple of days, let it retrace into the, the red zone here. And then, if it comes down $1, then you can close the, October, the short call position, with, basically, what you entered for. So like, if it's a 1-for-1 trade or so, you let this come down, then you basically scale the profit back. Or you could just ride those all the way to October, let them expire, and then you keep both the, the premium on the short calls, and then, of course, whatever profit that you made on the long calls, for August. So, and then worst case scenario, of course, is, if earnings comes, it's a miss, and it's still like, 280 or whatever. Like,
Yep.
yeah, you can, still cash this out. You'll still make a little bit of, maybe make premium, but you won't lose everything, basically. It basically, the loss is offset by, what would have been the theta decay in the shortfall. So,
Yeah.
so you can cover for less money anyways. So you don't really...
You didn't lose anything.
Yeah. Because, like, think of it this way. So it's like I sell one for, $20, and then I buy one for 18. I'm going to get a credit of about $2 per spread or so.
Yep.
If nothing happens, like these will bleed down to probably $8 or so per, $8 to $12 per contract or so, 1 week ahead of expiration. But those short calls those will bleed down, somewhere between, $3, $5, $6 or so. So it's like $14 minus, 12, 11. Yeah, you might need to cover for like an extra $2 or something like that. But it's basically a theta neutral strategy.
Yeah.
Yeah. Or if you really want to make it extra theta neutral, you don't buy it August, you just buy September instead. And, if it doesn't pan out that way, then, you just do that. But you make more, though, if you, do it that way. You get it more in the money, so you make more money off of both the delta and the gamma. And then you just wait for, theta to decay a little bit, and then you offset
if it's running that high and that fast, I mean, the IV'd spike also, and you'd have a good...
Yeah, and that's a great point, too, because IV is obviously going to be a lot higher for close expiration, strikes as opposed to, longer dated ones.
So you should make good money off those if it does pop.
Yes, exactly. And that's also, another thing, too, because, like, there's the event volatility risk, too. The IV is going to spike up, dramatically on the 8th, but the second that the event comes and something happens there, then, market makers are going to want to price down the, longer dated ones because they know, people are going to be coming in there. So if you already have the IV in there, then, you wait for that to, well, I don't know. I guess that's kind of contradictory saying it because, they're gonna hope for, FOMO buyers here, but IV will definitely be higher, for the short dated strikes compared to the longer ones, but you'll definitely see IV go up.
Across the board, yeah.
Yeah, just less so than, for the 819 strikes.
Yeah, because I noticed there was a good amount of, I don't know, can you pull open interest on your thing, or?
I can find unusual whales. Let's see here.
I just wanted to see if you're able to see on Aterian 2020, Jan 2023. Because I've noticed on the Ortex, it's showing that the calls are going up right now. Or at least that's what the thing's indicating. So
yeah, so let's see here. Okay, so there's one here. I think people can see my screen here still. So it looks like, okay, somebody sold a $4.50 put for November 18th here, and then bought, so they basically did the forward calorie spread here, yeah.
But that's November, right?
Yeah, this is November, so, they're...
How big's the position? It doesn't look that big, though, right?
Yeah, it's bigger than what we've been seeing here, but 20... Yeah, sell for 25, open for 26 here.
Okay.
Yeah, so...
What about January 2023?
Yeah, let's go to... Okay. In January 2023, it's pretty dead.
Okay.
Yeah, there's 2,000 contracts open for $3.50, 1,000 for 4, 2,000 for 4.5. Yeah, it's...
How about 2024?
24, so that would be... Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. What that would be here? I don't know, actually. Yeah, it has it as an option here, but no pun intended, but I don't see the column for the 2024. I'll just
That's weird. I was going to say, because I know there's a good amount of open interest at like 150, I think, and 250 for 2024. Because I think a lot of people are seeing that Theta's,
yeah, they have 757 at 150. I'm at 2024.
Okay.
Only 5 for $2.
How about 150?
2,096 contracts at $2.50. 757 contracts at 150. Yes, it's.
So they're starting to, it looks like, basically stack the lowest or the furthest out, because I think that's right now the furthest out you can go.
Mm-hmm.
But it looks like they're starting to stack some of the in the money stuff. Like it's slow, but like that's what it appears to me at least. I guess there's what? Where's the 2024?
Yeah, it's actually not like charted in here as far as like the OI goes, but I'm I manage 3 people's Robinhood accounts here, so I'm just getting to mine here.
You're fine. Let me see if I can pull something.
Yeah. Pretty good delta here, so.
Yeah, it just seems like those right now are pretty safe. At least that's what I've noticed.
Yeah, so, it looks like the bid ask is a little on the wide side, but the 250 call for an ask of about 26, that's $4. Yeah, $4.66 a share. That's not bad for buying yourself over a year's worth of time.
Yeah, you're looking at like what's that now? How many months out is it?
That's 12, 18 months.
Yeah, it's almost a little bit less than 2 years, right?
Yeah, about a year and a half or so. Yeah, so that's more than safe.
Yeah, and I think if you look at the price difference between the 2023 and the 2024, it wasn't even that much. It was like, are you able to see what's the price difference between the 2023 at like 250 or 150?
Okay, yeah, so it's at 250. Actually, that's a pretty significant difference. The 250 lead calls for January 23 is $55 bid, $62 ask, whereas for 2024 it's $98 bid, $126 ask. So you can get 2 times as many calls, but you're starting to get into that regime of, theta decay or so.
Yeah.
So I don't know. You could always take the strategy, sell one $2.50 call for 2024, and then just buy 2 for
2023.
Yeah, 2023. Yeah. And by the time it gets there, well, hopefully Aterian's actually stabilized at 8 to 10, 15, 20, whatever a share, and
yeah,
that would
be nice again. We'll see.
Get creative there. So,
all right.
Yeah, I think, but yeah, that's just kind of my thinking. Trying to do something that's theta neutral, so that if something doesn't hit or whatever, that you're not completely out on the premium, but you don't exactly have to guess when. If it oscillates a little bit, it's like, oh my god, it's going to go up, or oh, it looks like it's going to go down. You can manage, about a 30 to 50 cent spread in the price and let it hit earnings, and then hopefully, flies from there, and then, just make money on the delta and the gamma.
Yeah, I found, so what I was looking at was January 2023. I guess the 350's got like 21K open interest. $4 is like 13K, or sorry, 1,300. 1,800 at 450. $5 has got 3,300 open interest. Is that what you're seeing also?
Sorry. Which expiration again?
January 20th, 2023.
Okay.
I was just looking at the more the 350 to 5 to 550.
350 to 5. Yeah, let's see here. Yeah, 2,000 on 350.
1,300, 18, 33.
18. Yep, 33. Yep, exactly the same.
Yeah, I just saw that there was a slight ramp forming, and then my guess will be some of the 3s and the 250s will start getting filled in as it gets closer. Mm-hmm. Those are still 176 days away, though.
Yeah, that's quite a lot of time, I would say.
Yeah, so I'm just wondering what happens if, when's the next... The earnings is August, and then when's the fourth quarter? Is that not till January, though?
Yeah, fourth quarter would end, I think, December 31st, right?
Yeah, and I think didn't they report in January? I
I
think.
think they did.
I feel like there was like some weird one where like it.
I don't honestly remember. In January,
I don't even know if you were in on that back then.
I
I think you're
was
still
I
with
was all about
BBIG.
BBIG. I think in January because I'm like, oh my god, this gamma ramp. And then sure enough, it did. It's basically a gamma squeeze and nothing more. But lessons learned. It's the first time I think I made like a 2,000%, and then I'm like, it's gonna go, another dollar, and I'm like, wait till tomorrow, and then ended up cashing out just basically at break even, and ended up taking a loss, and that was probably one of the harder lessons I learned on, not just options trading, but the psychology of it too. Hoping for that next, 50 cents or a dollar, to make an extra $50 a contract, and yeah.
Yeah, so here's the weird thing about Aterian's reporting, right? So we have a report in August, usually.
Mm-hmm.
They have a report for third quarter in November.
Mm-hmm.
And then fourth quarter doesn't report, though, until March 8th.
That's a decent amount of time.
Yeah, that's a good amount of time between the two. And then they report first quarter in May.
Mm.
Right?
Yeah.
Back into August, and then it goes through. But that's their schedule is August, November 8th. These are last year's, but August 9th.
Uh-huh.
Third quarter was November 8th. Fourth quarter was March 8th. And then May 9th. And then this one will be August 8th.
Mm.
Expected right now, according to Google, is negative 0.13, so negative 13 cents earnings per share. I saw other expectations being around negative 17 a share on NASDAQ, but Google's reporting negative 13. That's what they're expecting. And I think Rakeshi, or whatever his name is, in the Discord, I have to go back and take a look at the Aterian chat. But I think what I saw was he was talking about what he was anticipating, and he had to adjust it because he saw that most of the... let me see if I can find... If I type Rake... He's done some pretty good stuff. I don't know if you've read his stuff.
Yeah, there's a lot of stuff that goes in there, but yeah, I know who you're talking about, and yeah, he's definitely contributes valuable information.
Yeah, I think but he had said he was expecting it around negative 14 cents. Because he noticed basically that most of as the shipping prices are coming down, he said that he's noticed that the logistics on the back end are actually where they're having more money spent. So from like the warehouse to like out to delivery, which I thought was interesting. So because gas prices went up and all that stuff.
Yeah, shelter costs.
Exactly, yeah, storage and So he was estimating that the cash burn will be probably around 9 million, and they'll be around 14%. So earnings per share is 0.01, and outstanding shares 65 million. Then burn rate would be 6.5 million. So we'll see. I mean, this is obviously us guessing.
Yeah.
But I think he's done some modeling, which I thought was pretty interesting, and but I do think we're going to see a run up on Aterian just because of that. You want to do BBBY?
Yeah, there was one on the chat request here.
Yeah.
So just disclosure, I know nothing about it other than I know this is in the meme basket here, but yeah, it looks like
they got hammered on earnings.
What's it?
Because I actually was looking at them as a reversal. I thought they were going to reverse, I think, around here-ish, back in, June. Beginning of June, I thought they were going to reverse because it looked like they were oversold. They just came out of this oversold period. on the RSI,
Yeah.
and they started coming back up, and it looked like the stochastic had curled, and I was like, all right, so they're going to pop back up into like probably this like $10 range. I was going to take profits there, and they just got pushed down.
Mm. Yeah, it's kind of strange. Yeah, because this is. Yeah, I'm looking here, so it's making lower lows on rising RSI here. RSI is still coming up. Kind of holding steady, just at this really oversold, 28 to 31 range here, and then they get to earnings, and then it just
gap
looks like
down.
they just got,
I think they're going to fill that gap at some point when they spring.
Yeah,
I mean they're below everything, right? Like everything's
this
down.
is below everybody's. Just I'm guessing this is below everybody's cost average here, and I'll take a look at my Webull here real quick.
But yeah, like I think my cost average is somewhere in the 8s.
Let's see here.
But basically, I got rope-a-doped.
7.65% of all shares are profited right now, and it's been that and beyond. I mean, even if they don't have great earnings, like it's still legitimate brick and mortar business here. It's it's kind of in this no man's land here where it's below most people's cost average here. There's definitely some new people that have entered here, but this one just at minimum here, it's like if you're buying here at 483, 751, and you're back in distribution here again. So this I could say with pretty decent certainty. I can't say when, but it'll definitely have a date with $8 to $9 again at some point, and more likely than not, once it gets back into its long-term supply zone here, in the 10 to 14 range, and I think once this bear market's over, this will be an easy 3-bagger for people that are willing
buying
to
the lower, as
and
long as they don't do anything stupid and go out of business or really dilute themselves, but
exactly, it's and if you take the I was reading a piece by Ray Dalio. He's the manager, Bridgewater, and he says one of his strategies is you take you'll always make a consistent profit if you take 15 uncorrelated bets, and I think there's obviously a lot of risk with individual stocks here, but if you kind of apply that in a stock mindset here, find about 15 or so stocks that have nothing to do with each other, but are very oversold. You should expect at least one of them to hit, or enough of them to hit where it gives you, even if one or two of them are really bad loss, that you'll see 3, 5, 10% or so profits over, your specified time period. And this looks like one where it needs to correct itself here. Like, I just kind of buy and hold this one longer term personally here. Just by looking at this alone, it's in clear accumulation. It's below accumulation for that matter, and just needs to go up at some point.
Yeah, I'm still holding on to these ones. What? Oh, do you want to pull up DTC real quick? I just wanted to take a look.
Yeah,
I think they moved today.
About this one recently.
I think they moved a little bit today, if I remember correctly.
They did, yeah. We talked about this one. This one had very, very squeezy type potential here. So it's a little bit more to go here. It's definitely got at least a little bit more upside here. But I think once the thing with at least this algorithm here and these EMA bands here, that represent accumulation here, once it kind of touches this, 520 to 550 region here, like this is going to be super squeeze territory here, because suddenly it's going to be in markup, but you have people here that still want to buy. So that's where you see these explosive moves up here. So as long as nothing stupid happens with the market either tomorrow or Monday, Tuesday, I think
you could see above 5.
I could see pretty easily above 5. In fact, 6 to 8 pretty easily, and then if it just goes bonkers, maybe we can find a shorter time frame here. Oh yeah, my God, this is absolutely ready for it. Any sort of trigger, really. But once it gets above 564 on the 4 hour here, like there's nothing stopping this. this will be this is a good one here. I appreciate you bringing this back to my attention here. I know we looked at it, what was it, like a week or two ago here, and it was just kind of flagging here in accumulation.
But I saw it starting to move today, and I'm like, I probably want to talk to you about this and see what you think, because I think this is starting to look like it might run soon.
Yeah, it looks like, let's see here, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 up. Yeah, maybe it gets here. Yeah, it's definitely going to go up. The question is, does it retrace,
back down,
a little back, back down and then, trigger, or does it just flag some more? And, and again, that kind of depends on what happens, I think, both tomorrow and Monday, because the market's obviously just been on full straight up, like, buy, squeeze the shorts, buy everything mode. And, as long as it keeps that trend up, I think, this will be well in a position, I think, to start squeezing again. And that's just, it's going to kind of depend on how the bigger picture shifts here, because, if we go into like a serious bear market rally next week, DTC is probably, let's see here. 640 to 660. It's got this level here. And then if it clears here, then it's got a massive volume gap up to about, $8 to $9 or so. So where it's trading at right now, this is probably a 2-bagger at least. So
we'll see. I mean, I've been used to this thing kind of just chopping in this range, but I mean, it looks like it's doing something.
Mm-hmm.
This is also one that's got a weird float, because there's probably more shares like outstanding that are like locked up than people realize.
Mm-hmm.
Like Ortex is not reporting like the entire big picture, which is, the institutions own a ton of the stock.
Mm-hmm.
So this is one like maybe not so much short squeeze, but like liquidity play.
Yeah.
Yeah, because
I could totally see that too. And then if it catches wind just on, if it gets high volume and starts tripping people's scanners, that's where liquidity becomes, turns this into just a organic squeeze play as opposed to a short squeeze.
Yeah, but like if you look at the institutional breakdown, like Summit Partners owns 44 million shares of this thing, as does Bertram Growth Capital owns 11 million shares. When you start adding up all the different like institutions own over 78% of this company.
Wow. Yeah, so they obviously have skin in the game there.
Yeah. So, and there's right now about 9% short interest, but that's based off of like a different float than what I actually calculated. So I think this will be more of a liquidity play, that there's going to be less stuff. But Chew, that's DZ Moneyman from the Discord.
Yeah.
That's his real identity, the weatherman.
Yeah. I'm a real person here, yeah. Everyone should know.
I'm actually fake, though, so.
Mm-hmm. Yeah.
But yeah, I was going to say, we're about to run out of time. How about you? I think I'm good tonight.
Yeah,
it's midnight.
Yeah, I'm just about, my time limit here. I'm going to take one quick moment here. There's a question about Tough Bill. It looks, it's kind of, one of those where, it's in a deep, the distribution cloud's down here. So I could see one more pop. Question is...
Oh, it's angry. That's angry.
Oh, sweet. Angry chick?
Did I miss Rev? No, I was going to say Rev. I didn't cover. I don't know if we've got a minute on this thing. Go ahead. You do your thing. Do your thing.
Bill, I want to say yes. The question is, I'm uncertain about the timing here. I'm looking at the daily chart here, and it obviously already had like a pretty significant squeeze here. So, just my 2 cents. It has a gap down to fill as well here. If you're looking to buy maybe a small position at like 510 to 520 and then, let it ride up here. But yeah, it hit the top of the red band, that I've been showing here. And that red band again is at about 870 to 9. So maybe it gets one more wick up there. And yeah, that could be profitable too. There's so many of these squeeze plays just going on right now. It just kind of depends on,
Yeah, and I was going to say, they have possible dilution all the way up to, they've already diluted once. There's another 4 million shares on the table. But yeah, they do have right now the ones at 5. So there's warrants at 5, and there's warrants at I believe 190. And we don't know if those have been exercised all the way or not, but there's 3.1 million shares at 190. So I think I lost DZ there. Well, it's midnight, so I was going to say I'll let DZ go. He can go to bed. I'll just cover Rev real quick for you. I do like Rev long term as far as like as long as they don't do anything weird. They do have a good amount of short interest against them right now. I'll just show this. Yeah, I mean I don't think anyone's holding it long term, but so here are your Revlon numbers. So right now there's about 71% short against the float. The float's pretty small. I know most of retail has probably moved on from this one, but they do have an active ATM going, but they haven't issued anything from it. So, what did you say? Love being bold. Glad you took the leap. We'll never go back to hair. It's so easy. Saves on haircuts. Yeah. I'm getting there. I'm losing mine. All right, let's see. So there's that, and then I can pull up Vortex for you real quick, just so you can see what's going on with that one. But yeah, I do need to go to bed tonight. But it was good hanging out with you, DZ. Thanks for hanging out, and we'll do this again. I'm cool with having you on anytime you want to come on. Yeah, cost to borrow on this one is averaging right now around 416. You've got about 78% of the free float shorted, which is about 4.11 million. Now, my guess is they're doing that because, utilization's been pretty high. So you've got your cost to borrow being super high. It's coming down slightly, but it's still like pretty high. Your utilization has been 100% since looks like May 24th. So they're going through a Chapter 11 like restructure. So yeah, I'm just taking a look. I mean, according to this, pretty much the shares on loan has gone down slightly. Failure to delivers are spiking. Threshold not. Oh, you were on threshold, I guess, or just came off of it. Or it's probably because it's in the evening and they don't sometimes throw. We'll have to check in the morning, but I'm pretty sure it's on threshold right now. And let's see, the free float on loans going up and down. Just looking at exchange reported SI, that's gone up, came down slightly on the last report. So it went from 5.6 down to 4.69, and now they're guessing it's 411. So it looks like they're supposedly covering some. What's the stock price been doing? So we did have a spike over the last couple. They're trying to push it back down, but my guess is they're going to be doing something with. They're cash flow positive, if I remember correctly. Yeah, they're actually positive cash flow. They've got some long-term debt they need to restructure, if I remember correctly. But obviously they're going through a Chapter 11, so there is some risk there. But yeah. By the way, my son went to college. He is smart. He told me to sell at $7. Oh, the bots. I miss the bots. Maybe we'll get them again when Aterian runs up. Or one of these other ones that we talk about. Earnings August 3rd. Is that what for Rev? Because Aterian's earnings are August 8th. Well, you guys, thanks for hanging out. Thanks, DZ, for coming on. Now we only get low-quality porn bots. Well, technically we got porn bots back then, too. But maybe they were higher quality. All right. Yeah, I want to see the 13F and I want to see the actual reports because I think that's super important for us to know kind of what's going on with their cash, where the company's going, how the revenue's doing, all that stuff. So, Aterian right now is kind of like in a holding pattern, but I do think that they do have to go up to unlock those warrants at some point. We obviously don't know exactly when that's going to be because they don't have to unlock them in September. They can actually, wait a while and then unlock them later if they want to. But there we go. I had to plug in my headphones. Yeah, I don't know if we're going to get that for earnings per share, but All right, so everyone's good. Okay, you're saying Revlon's earnings are going to be on August 3rd. Okay, yeah, it'll be interesting to see what ends up happening. So that's coming up, obviously. You can see it, right now it's getting pushed down. They had these couple days of covering, and now they're pushing it down. They might have to cover again, but, Oh, we're on the weekly, that's why. Okay, here on the daily. Yeah, so it's been a while. So they had that nice covering right here. It's been going down. They've probably been pushing it, so... Well, you can do whatever you want with your money. I was going to say, if I was going to do anything, I think DTC's, that's personally, I've got money in DTC, I've got money in, a little bit of money in Rev, and I got some money in, obviously, there's a couple different plays I'm in right now. I do have some money in BBBY. Obviously, I have a ton of money in Aterian. So, yeah. I also have a ton of money in GameStop. I don't really have much in AMC, to be honest with you. I have a couple far out of the money calls on that just in case it runs ever, and they're for next year. So seems I had joined, but I did not know how to use it. Yeah, it's not too bad, Rosa. I was gonna say if you want the link again, we can give it to you. I mean, so anyone that wants to join, DZ is on the Discord. Providing great information. There's actually a bunch of really smart people on there, so yeah, you just have to basically confirm you're not a bot as soon as the Discord opens up, and then everyone pretty much hangs out inside either the main chat room or the Aterian only. Depends on what you're, but that's where the majority of people are. But there's tons of resources in there. It's all free, so it doesn't cost anything. And a lot of other people charge for their Discords, but ours is completely free. Yeah, DZ's a really, really smart guy. I'm glad he's here with us and hanging out. And we actually have some pretty smart people inside the Discord. So I think, as we grow, we're going to find out more and more people. And people are able to kind of share, good ideas. And if they see something, I've had other people, bring to my attention, good plays. And so we talk about them, we research them, and, that's kind of what we do. So the goal is eventually, to create something that we're, able to do this stuff faster, on the fly, take a look at dilution, take a look at, all these different aspects of the, these DDs and kind of do it on the fly so we can make good decisions before we enter in anything, know the risks, all that kind of stuff. I'm trying to right now create something with a couple people inside of, this hub creation team. We're tentatively calling it the hub, but basically what it is we have a document that we've built out, and Kathy is an Irish programmer, and we're kind of going through here, pulling up different. I have different aspects going on here, but 13Fs on things. We're putting up. So she's been actually tracking. We need to update this. It looks like the last edit we have made, or maybe I need to update it. It's loading cells, so maybe she's already pulled it in, and I just need to load it now. But she's pulled scripts that are able to actually pull every single bit of data that I asked for, which was the FINRA short exempt volume, the total historical volume. Yeah, I don't think it's pulled in yet. Nope, maybe it has. Let's see. She may have to run the script. So I can see Anon's 2 messages on a screen. Okay. Is it like rules or something like that? You want me to send it to Anon? What are we sending? If I buy DTC, I will be complaining it's a shit. It seems I have to follow channel updates. Wait, what? All right, hold on. Let's go find you and rescue you. Let's go into... you probably came into the welcome area, right? New messages. Okay, where is... Riza, where are you? No, I do not have the permission. I don't see your name. You said it was Riza Soul. There you go. Here you are. You just slid into the server back in... looks like April. We can say hi. There. So, if we go back here... Yeah, you need to confirm you're not a bot. So if you're watching this right now, you go in, I think you get here first, right? So it says, are you really a human? You have to hit one of these buttons. Oh, I guess I already did hit it. So Riz, if you're on here, if you're watching, you've got to hit one of these buttons to show that you're a human. I'm seeing if you have hit it because I'm watching the numbers. React to this message to be able to use a server. Yeah, so you do this, right? So you say, yes, everything's good, thumbs up maybe. So you hit the thumbs up, and then that will say, hey, you're a real person, and then you're supposed to check out the rules. Oh, it should be at the top under rules. There should be a welcome thing. Here, let's see. Can we do at oops. Is that right? All right. Did you see that? I mean, I guess technically we could make a YouTube video and just show people how this works. Do you think that would be, like, good? Just to show, like, hey. What do you guys think? Yeah, so Riza, when you're in here, just hit like the thumbs up button. So just hit that button, and that will be you reacting to it, and that should open up the rest of the Discord for you. And then most people hang out here. Okay, good stuff, yeah. Yeah, so there's a bunch of people hanging out in here. If you ever want to use any of the tools, like I just hit the TA on the spy, was able to pull up these resistance and stuff here. There's a bunch of different bots that we have in here. I've got to add... so Rich Graves been giving us access to, I guess, his bot, which is kind of like a AI bot. And we should be able to ask it questions and stuff like that. and get snarky answers and fun things like that. So that's going to be an addition that we're going to be doing. So. Yeah, but you'll see there's a bunch of side conversations going on. A bunch of people talking in Aterian's chat as well. We have obviously a lot of stuff in Aterian, but there's always this individual stocks that you can request tickers, but there's a bunch of different stocks that people talk about in here. Market education, actually, I feel like more people should probably be in this area. So just so somebody knows, if you actually go to fundamentals and you scroll all the way to the top, I left the Dropbox link. Yeah, right here. And if you guys actually click into this, there's a ton of free books in here that I left. One of my buddies gave me access to this thing, and he was like, this guy basically opened it up for everybody. So if you wanted to go into like, day trading, fundamental, like how to do fundamental, there's books on fundamental analysis. This is all free. And like I made, you can learn about Forex, you can learn about hedge funds, how they work, long-term investing, margin trading, options trading. So if you want to learn about options, there's a ton of free resources right here for you guys. And I don't think that everybody knows this, but like it's there for you. So all you have to do is go to fundamentals under market education, and I left it at the very top. I probably should have pinned this, to be honest with you. Let me pin this. Can I pin it? How do I do that? Such a boomer. No, I did pin it. Okay. Pin message. So I already pinned it. But yeah, I wrote out things about warrants and, because people wanted to know. There's actually, I left also like a link to Dilution Trackers training. So you can go there and do that. You can learn about like the different aspects of warrants and like, there's cashless. You learn about death spiral financing. There's all sorts of good stuff in here. So, yeah. People have posted things about algorithmic trading, financial ratios analysis, fundamental analysis, about reg show. So this is all the stuff that you guys should, look at. If you want to learn about the market, this stuff's all there and it's all free. Like, the whole point of this Discord was to try to help retail learn. Like, I mean, I know obviously, there's been ups and downs in stocks that we've traded, but like the idea behind this is, the information's there for everyone to learn. So good stuff. All right, so you're on there now, and you can hang out and see how it works. But it's fun talking to a bunch of people on here. And all right, so I'm going to delete these. That way. Are you on, Reza? I just want to make sure you're good. No man left behind, right? All right. Well, I need to go to bed. It's late. So, thanks for hanging out, guys. It's been fun. DZ, thanks again for hanging out with us, and it was good. All right. Good night, guys.